When most people look at Bitcoin, they think that it's trading at a certain price, typically around $30,000. And while this is true, there's actually something that I find just as fascinating here. It's actually trading at 800,000. And people don't realize this because they have a certain set of biases. And today I want to break down what those biases are and why Bitcoin actually has just hit new all-time highs of over 800,000 per coin. See, for us to understand that, we have to understand that everything is an exchange rate. So here in the United States, like I said, Bitcoin is roughly around 29, 30,000 US dollars per coin. And why is that? Why is it 29,000 and not 29 or 29 million? The reason is because exchange rates. We have a certain number of US dollars in existence. And if we were to have more US dollars or less US dollars, exchange rates would just be different. Think of example for oil versus something else, like let's say houses. If you have a barrel of oil and you have a house, well, the exchange rate is X number of barrels of oil per house. And if you have a large, or if you have a smaller unit that is you're using to measure the oil, then your exchange rate between the two goes up. So instead, if you're not measuring oil in terms of barrels, but in terms of, let's say, gallons or liters or cups or ounces, well, then the exchange rate is going to change. The value of the oil is the exact same. It takes the same volume, the same amount of oil to exchange for that house, but the specific number itself has changed. And so for us here in the United States, we're biased to have the number 30,000 to be the number at which we think Bitcoin is valued. When in reality, according to some people, it's 800,000. Now, who are these people precisely? Well, these are people in Turkey. See, this is not US dollars we're measuring from. This is Turkish lira. See, to them, their lira has a larger quantity of political currency units than here in the United States. And so for them, they don't look at Bitcoin as being down 30, 50, 60% like we do here in America or the West. But for them, Bitcoin, viewed from the lens of the Turkish lira, is at an all-time high. And that's the point I want to make in this video, that everything is exchange rate and everything is just pricing one thing in terms of another, pricing something in terms of something else. See, for example, over here, while it may be 800,000 political currency units in Turkey, here it's 447 million political currency units. And this is Lebanese pounds we're looking at here. And so you can see how in 2018, 2019, 2020 it was significantly lower than today. And then obviously in 2021, you had the peaks here, crash just as it did in everywhere else in the world. And then we have a massive spike here where the exchange rate of Bitcoin in terms of their local currency and their jurisdiction skyrocketed. And this is because literally overnight, they devalued the Lebanese pound by a massive degree. If we go to another example here, we're not looking at 450 million anymore, but we're looking at 39,000. So this is getting much closer to our unit bias here in the United States. And the reason is because we're looking in Canadian dollars. See, Canadian dollars have a larger supply than US dollars. This is why when you go to the store and you see the price of a book or the price of anything else, you see US dollars and Canadian dollars. And the reason different price is, again, exchange rates. The currencies are worth the same. The book is worth the same in both. It's just that people's unit bias is different. Now, what do I mean by unit bias? Probably a lot of you are aware of it, but for those that aren't, unit bias is basically when we get accustomed to a certain number, and that's just what we perceive it as. So if we think that something is worth X number, then that's what we think it's worth. And so as that number changes, we think the worth is changing when in reality it's not. One Bitcoin is worth one Bitcoin. It doesn't matter if we're talking in 30,000 US political currency units or 450 million Lebanese political currency units. It's the same thing we're trying to describe. We just have different ways of describing it. So again, referring back to Canada's example, for them, their unit bias is roughly 40,000. For them, their low was in the low 20s, 20,000 Canadian dollars. We're here in the United States, we're looking at the mid-teens, 15, 16, 17, 18,000. And so over here, again, we're looking at nearly 10 million Sri Lankan rupees. Okay. And actually, it's very interesting because comparing to somewhere like Turkey, let's say, where you have the one high here, you have a significantly higher high over here, and now we're reaching new all-time highs. For the where did they go? For the Sri Lankans, it's relatively flat. Why? Because the rate of them increasing the number of currency units in Sri Lanka is very different. And so that's the way that they price things. That's the way they view the world. And so when you look through that lens, everything else becomes distorted in accordance with that lens. So see, for them, Bitcoin is not near its all-time highs, but it's also not had this major crash. Look, we've seen here in the United States. This here is the United States. This is what most people are used to when looking at Bitcoin, is that they see this lower period in 2018, 2019, 2020, these massive two spikes here in 2021, and then it's crashed and quote unquote not recovered since then, even though Bitcoin has nearly doubled since its bottom, up well over 75% there. So again, if we go back here, they don't have either of that. They have these two spikes, but they have this third spike that most of us don't even have or don't even recognize. And likewise, for them, their bottom was not nearly as bad as it was for us, because for us, it was 50% lower than the bottom of 2021. But for them, it was roughly the same. Again, when priced in terms of their political currency unit, we're looking at roughly 10 million Sri Lankan rupees. Over here, we're looking at 23 million. This is in Nigeria. Nigeria is having massive controversy with their central bank and with their centralized currencies and movements to CBDC. And recently, in the last year or so, we've seen massive spikes of demand for Bitcoin, as well as massive devaluations of their currency. So likewise for them, they're near all-time highs with this massive spike that happened overnight, up 88% in terms of their local currency here. And so we could go on to the Japanese yen. Again, people often criticize me for singling out nations like, say, Sri Lanka or Nigeria that are smaller economies. Well, here we can look at Japan. There's 4.2 million political currency units in exchange for Bitcoin there. So it doesn't even have to be specifically smaller economies or larger economies. At the end of the day, we're looking at the same thing. We are trying to judge different political currencies. And again, here's the United States, over 29,000. And a tangible example here, as I have an example, here we have the US dollar. This is 5 units of currency for the US dollar. And so at one point, I could exchange these 5 units for, say, a book or something else that's of value to me. And as we create more of these units, as we change this number into the future, our unit bias is being forced to adjust upwards, even though everything else, like say here, bolivars from Venezuela, this is 1 million bolivars. So what's my larger point here? My point is that the number is irrelevant. It doesn't matter if we're talking 5 or million. This is worth hundreds of times more than this, even though they're both pieces of paper. They both have faces on them of different people from different times and different eras. But ultimately, my whole point is that the number is worthless. It doesn't matter if we're talking single digit numbers or single digit millions. At the end of the day, it's all about exchange rates. And so something in one frame of reference, in one frame of value, say the US dollar, is going to be a very different frame of reference from a different perspective, from a different frame of view. And so my point is that when people are looking at Bitcoin and they're saying, oh, it's $30,000, oh, it's X or Y or Z number, what people fail to understand is that they're looking from within a series of numbers, that the numbers themselves aren't actually the value. What is the value? The relative value is the scarcity or the relative scarcity between these currencies. The US dollar here, that's this $5 bill I have, is worth more in relation to this currency because the relative abundance or the relative scarcity of this currency is significantly more well defined than the relative security and the relative abundance of this currency. This currency is much more infinite and much less scarce than this currency. These set of numbers are much more valuable than these set of numbers because these numbers are much more difficult to reproduce and have much more scarcity. And so if we're trying to value Bitcoin, we can't look from a frame of any of these sets of numbers because what we're looking at here, okay, what we're looking at right here are all the different currencies or all the largest currencies in the world. So you have, of course, the Chinese yuan, you have the US dollar and the euro, the 3 big ones, you have the yen, like we just looked at, we have the pound, which is the oldest fiat currency in the modern world today. We have South Korea, India, Canada, Hong Kong, Brazil, Australia. You could just go down the list. Now, what do all these currencies have in similarity? They all are unlimited. If you look over here at the right and you look at supply, unlimited. That's what all these currencies have in common. The circulating supply, the number is irrelevant. It doesn't matter what we're talking about. Everything is simply an exchange rate. The ultimate thing that matters is this currency unlimited? And if it is unlimited, how unlimited in relation to every other currency in the world? See, people think this might sound obvious, but people really don't understand that. Because people say, why is the US dollar the most valuable? Like, oh, well, 1 US dollar is worth 100 million bolivars or 1,000 pesos or whatever. And it's funny because we make that a self-fulfilling prophecy. We make that true because we perceive that. We artificially make these numbers more scarce because we want people to believe that. And at the end of the day, it's not the number that is what is valuable, it's the relative scarcity. Why do we have the US dollar have a lower number, a lower exchange rate than everything else? Is because we want it to. And why do we want it to? It's because we want to reinforce the idea that the US dollar is the most scarce. So it's a great irony at the end of the day, but even though it's kind of right, it's fundamentally different. It's fundamentally opposite from what people understand. And so if we look, they're all unlimited. They all have that similarity. And it's just a question of which is more unlimited than the other. However, if you go here to the 20th largest currency in the world today, you come to this other one, this weird thing, this weird orange coin called Bitcoin. Unfortunately, it's not the 21st in the rankings for today, but it's the 20th. And so, in the same way, in the opposite way of everything else, there's a finite number. And see, the number itself is irrelevant. Again, in the same way that the numbers of all these other currencies, the number of circulating supplies for all these other currencies is irrelevant. In the same way, the number for Bitcoin is irrelevant. It doesn't matter if there are 21 million Bitcoin or 21 million Bitcoin. At the end of the day, what matters is this number scarce or not? Is it scarce or not? That's, at the end of the day, the only thing that matters. A good metaphor for this would be if I'm trying to build something. Let's say I'm an architect, or let's say I'm trying to build you a house. And you ask me to build you a house, you give me the blueprints, you tell me what we want, and we define our unit of measure as a body part. You know, this is what people did in the ancient days. In the ancient world, this is exactly what people did. They measured in terms of cubits, or you could look at the length of a finger, or you can look at the height of a person. You could use any part of the body you want to measure things and communicate a length of measure to each other. But the problem is all of those things are easily manipulatable. You know, if I want to measure a house in length of a cubit, let's say, from the elbow to the fingertip, my incentive as your builder is to go out and find the people, find the builders, find the contractors with the shortest arms possible, or perhaps even builders that don't have fingers. Even though it makes no sense, they're not going to build nearly as good of a house for you. At the end of the day, that's my incentive, because if I can manipulate things, if I can manipulate the rules to my advantage to find an artificially shorter length of measure, well, then I could build you less house. And that's exactly what's happening with these kinds of methods of measuring value instead of measuring length. That we are using different body parts, let's say, to try to measure things and communicate value. And it's true, some are better than others. The US dollar is a better fiat currency than the Venezuelan bolivar, in the same way that using a cubit is a better form of measurement than, let's say, fingernails or hair length. Why? Because hair length or fingernails are much more easier to manipulate than the length of a human arm. Even though both are manipulatable, it's more, one's more difficult to do than the other. And likewise here in the United States, it's more difficult to manipulate our currency because we have the stronger military, the stronger government, and the stronger political system. But at the end of the day, it's still a political system. And so while the best political system will win at the expense of the inferior political systems, if we were to find a way to accurately communicate measurements to each other, in the example of the metaphor, or economic value to each other, an example of currencies, then that is a significant milestone. You know, it makes everything else ancient. In the same way that today we will laugh about building a house in terms of cubits or in terms of hair length, or in all those things, all of them are laughable. It doesn't matter how much better one of those is in relation to everything else. They're all immediately laughable in the face of the metric system. And likewise, all these political currencies, even though they're different, yes, even though some are inferior to others, yes, obviously, at the end of the day, they're all the same. They're all reliant on political institutions at maintaining that relative scarcity from one system, from one series of ones and zeros to another series of ones and zeros. And so I think in the future, people will look back at us as in the same way that we look back at people in the ancient world with their ancient units of measurement. They'll look back at us with ancient units of measurement here. They'll wonder, why on earth did we ever trust Mexican pesos, which were unlimited? Why would you ever trust those, or Russian rubles, or Swiss francs, or anything else? Why would you trust all those political institutions with their currencies? Why would you own a mixed basket in these currencies when you could just own a defined portion of a finite ledger here of Bitcoin's system? And the funny thing is that I say these things, and they're often difficult for people to wrap their heads around, but at the end of the day, we actually already kind of know this. We do this. It's what we base our entire investment strategies on. So it's what we base our entire retirement portfolios on. This is the S&P 500. since the year 1983. Today it's trading at roughly 45.36, and we have this unit bias to think that the S&P 500 is worth 45.36. What does 45.36 mean? Nothing. It's just a completely made up number. It's purely an exchange rate. And so when we look back in the 80s and 90s, we hear, oh wow, the S&P 500 was 300, or it was 230, or it was 160, and we think, wow, the S&P 500 has gotten so much more valuable. Again, it's not that the S&P 500 has gotten so much more valuable. It's that we have this unit bias of thinking, okay, the S&P 500 is worth 45.36. And in this other period of time, it used to be trading at 160 or 200 or whatever. And so we think, wow, it's gained so much in value because we're looking from that frame of a unit bias into the future. We're ascribing the current value of these currency units into the past. When in reality, again, it's just an exchange rate, and that's not really how it works. See, if we look from that frame of reference of the US dollar, we think it has skyrocketed in value quite a bit. When in reality, if we look at it from a different frame of reference, we see the same measure, the same stock market, the same S&P 500, except we look back to the early 60s here over on the left, we see a completely different story. See, here it looks like it's flat. It looks like there was a major crash in the 1970s and then a major bubble up here in the early 2000s at the turn of the century. And then since then, it's been basically flat. You have the major crash in 2008, you have a smaller crash in 2020, and then it's basically near all-time highs of the last 20 years or so, but nowhere near the all-time highs of 1999 and 2000. And see, again, when you compare from the frame of reference of the US dollar, it looks like it's completely different. It looks like it's much more exponential. In fact, if we take a different view, a different chart, and we zoom way out, it looks even more exponential. It looks even more dramatic here. It looks like a completely parabolic chart. And this is also because we're looking back even farther. Instead of looking back from the 1960s, we're looking back from the 1940s and beyond. And see, I make this commentary here that from 1980 to 2023, the S&P 500 increased by a factor of 32x. Ironically, in fact, not coincidentally, the national debt of the US government also increased by a factor of 32x. And see, what's happening here, again, I want to emphasize, is not that these things are increasing in value. It's simply that our unit bias is being hijacked and helping us think this is what's happening here. In the same way that people would criticize me for saying that, oh, Bitcoin is not trading at 450 million in terms of Sri Lanka, or in terms of 39,000 in terms of Canadian dollars, or in terms of other fiat currencies. Like, oh, well, that's just misleading because ultimately the same day it's the same value, and it's just you're cherry picking a different country and a different currency to measure things from. And likewise, I would make the same accusation here. You know, it's so funny. People criticize me for cherry picking other nations and saying, well, Bitcoin's already at 1 million in terms of this currency, or 800,000 in terms of the Turkish lira, or 500 million or 1 billion in terms of these other currencies. And like, oh, well, see, the S&P 500 has gone up in number. You don't know what you're talking about. It's like, well, the US dollar today is not the same currency it was 40 years ago. It's not the same currency it was 30 years ago, because we're constantly changing that currency. We're constantly changing the relative scarcity of that currency. And so it is perfectly valid to say that the S&P 500 is up in terms of the US dollar, but it's not perfectly valid to say that it's the same value. And in the same value, the dollar amount is the same value. 4,500 today for the S&P 500 is not the same as it was in the past. It's completely different. And likewise, it's the same when comparing Bitcoin in relation to these other international currencies. And so this is a good little meme here, a good little metaphor for explaining what's happening. See, fiat currencies and these political currency systems are designed to erode over time because we have this incentive to make everything feel like it's getting more expensive. We want house prices to go up. We want the stock market to go up. We want these things to go up over time. And so we devalue our measuring stick over time. You know, in the same way, again, with the metaphor, if I want to pretend to people that I'm building more houses every single year, well, what I do is I artificially distort the unit of measure, getting shorter and shorter every year, meaning that I can build more houses for less supplies. And I can lie to people and tell them that, hey, I doubled the number of houses I was able to produce this year. Wow, look at me and how productive I am. When in reality, I did produce double the houses, but they were only half the size and half the living space. So at the end of the day, it's the exact same. I'm just distorting our unit of measure so that I can convince people to think that I'm being more efficient than I actually am. And so this is why it's inevitable. It's going to continue to happen for political currency units. Like I said, the S&P 500 has gone from 150 to 200 up to 4,500. That's a factor of 25x, of 30x. So in the future, yeah, probably the S&P 500 will not be trading at 4,500, it'll be trading at 100,000, probably even more. And that's not to say that the US stock market is going to get 25 times more valuable in absolute terms, but in relative terms to that currency, it will get more valuable because everything is just an exchange rate. And this set of ones and zeros, this set of numbers is more abundant and less scarce than the numbers in the US stock market or the number of shares in the US stock market. And so Bitcoin is a solution in contrast to that because it's a finite number, because it's a finite number of ones and zeros, and it cannot be debased over time. It cannot be manipulated over time. It's an accurate form of measure. Your percentage of Bitcoin that you own will be the same percentage tomorrow, next week, and 100 years from now. In the same way that a ship is sinking and they're all sinking at different rates, Bitcoin is the one ship that does not sink. If you have one ship with a small hole in it, another ship with a large hole in it, again, using my physical examples here, this ship is sinking. And this ship is like a Titanic. This ship is going down orders of magnitude faster than this one. It doesn't change your end destination. They're both going to the bottom of the ocean. They're both going to zero. It's just dependent on how fast are they going and how many people are they going to take down with their ship. Compared to Bitcoin, is a ship that floats. It's a closed system that doesn't have oncoming entropy. It doesn't have an oncoming energy loss in the form of, I know it's not technically entropy and energy loss. You get what I'm saying, hopefully. And that's why when people look at Bitcoin from their frame of reference being their own political currency units, they think that, oh, Bitcoin is giving your energy back. And actually, this isn't actually true. It's not actually giving your energy back. It's simply preserving what you have. So this meme really isn't quite accurate. Oh, we have a hater here. Oh, Big Harry. Big Harry's not a fan of the meme. That's funny. Sorry, Big Harry. See, what Big Harry needs to understand here is that if we look from any frame of reference, if we look from any of these sinking ships, from this sinking ship of 450 million political currency units, and we're looking from this frame of reference or this frame of reference, all these things are sinking ships. And so from all these frames of reference, it looks like Bitcoin is skyrocketing, when in reality, it's the currencies that are collapsing. And so if we're to conclude here with a final example of the US dollar, actually, let's look at a couple more examples. Let's look at this one here. See, this is the S&P 500, American stock market, in terms of Bitcoin. And see, the S&P 500 is falling. So the same way that the US dollar is a more abundant source of zeros, it's an unlimited source of ones and zeros, it's falling in terms of the stock market. But the stock market is falling in terms of Bitcoin. And again, if we look at a very similar chart here of M3, all money, US dollars we're talking about here specifically, and priced in terms of Bitcoin, it's the same story. And so likewise, what most people do, and what most people have trouble doing, is they look at Bitcoin through the lens of the US dollar in a short time preference. So here's one day. It looks like the US dollar is up against Bitcoin. Good for the US dollar. It's up, whatever. And people say, oh, look, Bitcoin's down, Bitcoin's down. That's not really what's happening. What's really happening is not that Bitcoin has gone down. What happened is that the US dollar is up in terms of Bitcoin. And that's why it looks like it's going down. It's all about your frame of reference. From the frame of reference of the ship that is staying afloat, it looks like the dollar is falling or rising. But from the perspective of the ship that is sinking, it looks like the ship that is afloat is rising up. And so if we look at the dollar here, priced in terms of Bitcoin, we see over the last day, it's up. If we look at the last 5 days, we see it's up. Not perhaps as much, but it's also up. If we look back at 1 month, it's basically flat. See, people will look at this and say, oh, nothing's happening, nothing's changing. But if you look back at the last 6 months, the US dollar has lost 23% of its value against Bitcoin. If you look at the dollar year to date, it's lost 44% of its value against Bitcoin. If you go out a whole year, again, we're looking at roughly 24%. So, okay, now we have a more consistent downtrend we're looking at here. If we go out to 5 years, the trend becomes even more dramatic. The US dollar has fallen 76% against Bitcoin in the last 5 years. If we go out to the max, the US dollar has fallen over 9 or just under 99% against Bitcoin. And this loss will continue to happen. This isn't just because it looks like the chart is near the bottom. It can continue going down indefinitely because there's an endless number of 90% losses that the dollar can have because there's an endless amount of zeros we can add to the US dollar. Again, to emphasize, that loss doesn't have to stop because all these currencies are unlimited in nature. And so in the same way that there's an unlimited number of political currency units we can create, there's an unlimited amount of losses that could occur within all these political systems. And so ultimately, that's the encouragement for people to get off zero and for them to consider buying Bitcoin. Is this frame of reference is simply misaligned. We believe this partial but also mistruth that Bitcoin is going up. It's like, yes, it's going up, and yes, it's going up forever. or in terms of US dollars, but the reason it's going up forever in terms of those things is because it's going down forever in terms of those things. And so I often tell people Bitcoin is going to $100,000 or $100 million or even more into the future. And they think that, oh, that's crazy, that's ridiculous. But again, the emphasis of this video is that's simply people's unit bias. They hear me say Bitcoin's going to $1 million, $10 million, $100 million because they're thinking in terms of the current value of their currency. They're not realizing that it's just their unit bias. It's just their unit bias persuading them to not understand that. At the end of the day, yeah, the US dollar is going to change in its value and Bitcoin's going to reflect that because it's an accurate measure. And so in the same way I could change the length of my hair, my fingernails, or the length of my arm or in selecting whose arm I choose, in the same way, yeah, it's with Bitcoin. And so it really 100 million is going to happen whether we like it or not. It's whether people understand it or not, whether Bitcoin becomes globally adopted or not. Bitcoin could have the exact same amount of adoption and exact same number of users as it does today, and Bitcoin could still go to $100 million. And people fail to realize that. The only question is when. Are we talking in 10 years? Are we talking in 100 years? Or are we talking next year? Obviously, there's a range of probabilities there, but that's ultimately the question of how bullish or bearish someone is about Bitcoin. It's just a function of how bullish or bearish are you on the US dollar and all these other political currencies. If you're more bearish, then you think that that is going to happen sooner. If you're more bullish on those currencies, you think it's going to happen later. And ultimately, at the end of the day, I have no idea. I don't know how quickly Bitcoin is going to go up to 800,000, not just in terms of Turkish lira, but in terms of US dollars. I don't know how quickly because I don't know how quickly we're going to create more of these. We're going to create more of these numbers. I don't know. Perhaps it happens soon, perhaps it happens later. But I do know that this system is reliant on our need for creating more currency units. It's reliant on its unlimited supply nature because we have to keep printing. We have an unsustainable amount of debt, and we can't service that debt with real productivity. We have to create more currency to service that debt. And so actually what's happening is not that Bitcoin's going up in value. It's not that the US stock market is going up in value. It's not that value is going up in real estate. It's simply that wealth and economic energy is being harvested from those that save in cash and from those that buy US debt, from those that buy US bonds, and redistributed over to those that hold hard assets, real estate, or let's say stocks, or gold, or Bitcoin. And the asset that preserves purchasing power the best, the asset that is most difficult to replace and most difficult to produce more of, is the asset that's going to acquire most of that wealth. And I believe that's Bitcoin. We can make more political currency units. We can make more real estate. We can make more gold. We can make more stocks. And people have trouble understanding that, but we can make more companies. We can make more brands. There will be more tech monopolies, and those monopolies roll over to new tech monopolies. All these things we can make more of. And that is the innovation of Bitcoin. The innovation of Bitcoin is not 21 million. The innovation of Bitcoin is not all the specific things that people like to get into. It's not the jargon. The innovation of Bitcoin is digital scarcity. And by nature, it cannot be reproduced, as it would undermine the whole function of digital scarcity. This is the double spend problem. This is the two generals problem, whatever we call it. That's what Bitcoin solves. Bitcoin, for the first time in human history, is a thing that we cannot make more of. And that's why it has to be digital. Because if it was analog, we could find a way to make more of it. But because it's digital, and because it's based on math, because of its cryptography, it cannot be reproduced. Been around for almost 15 years now. Nobody's figured out a way to do it. Every time someone has copied, every time someone has duplicated it, the duplicate falls in value exponentially against the real thing. And so that's my encouragement to people that sure, Bitcoin's going to 800,000. Sure, it's going to a million, and then 10 million, and then 100 million. And then, yeah, billions and trillions and quadrillions and quadrillions after that, eventually in a long enough time horizon. But one way or another, most people need to think of Bitcoin in terms of those absurdly high numbers for them to understand they have to destroy the unit bias. And so that's my encouragement for people watching this here, for you watching today, both in your self-learning and educating others, is that you have to first accept Bitcoin's going to 100 million or 100 billion per coin in terms of your political currency. And you have to accept that for you to be able to accept that it's just unit bias. Bitcoin's already trading at trillions of bolivars. It's just not trading at trillions in US dollars. And so it's simply a matter of time. How quickly? I don't know. But I do think it will happen. And I do think that the value of Bitcoin will continue to rise in real purchasing power as well, as people opt out of political currency systems and they opt out of unlimited ledgers and instead prefer the finite ledger. So if you want to think, well, Bitcoin will be more valuable in the future, well, okay, in terms of my political currency, it'll be more valuable. And in terms of adoption, it'll be more valuable. Right now, 1 in 1,000, 1 in 500, something like that, people have adopted Bitcoin today. There's a lot more people to come and understand this. And my sponsor for this video, who I really want to thank, they enabled me to dedicate more time and ability to make these videos and create this kind of content, is for my friend Brian DeMint. He's written this book, Bitcoin Evangelism. I've started reading it. It's very good. And it's very good because it's very readable. It's very understandable. There's lots of visuals in here. So you see you have the different qualities of money, explaining how Bitcoin is a superior form of money compared to political currency units, compared to other hard assets such as gold, which was a dominant form of money for thousands of years. And I would argue Bitcoin's replacing them. And so it's very reader friendly. It's got very large text. It's got lots of good quotes um, from a very varied source of people. It's got Bible verses. It's got quotes from politicians and people that were advocates of Bitcoin, advocates of hard money, both in the 20th and 21st century here. Lots of charts, lots of data to really help you understand what's going on here with Bitcoin's adoption. And the reason Brian DeMint has a unique perspective here in writing this book is that he used to be a founder of a crypto project. And so he really gets into here what makes Bitcoin unique. You have all these thousands of altcoins and alternative digital assets, NFTs, you have all that other stuff, ordinals, whatever, lots of debate and all those things. But he has that perspective of coming from that background. He's able to explain what makes Bitcoin different, having been on both sides of that equation. So it's Bitcoin Evangelism. There's a link in the description for you to order it. And I'd really encourage you to check it out. It's a good book, and he's a really good guy. And ultimately, at the end of the day, whether it's you're watching this video and sharing this video, like, comment, subscribe, all that, or it's reading this book or other books of similar value, at the end of the day, I just hope people can understand that our unit bias has been hijacked, both by the government, but especially by us. And understanding Bitcoin is coming to understand that your brain's been playing tricks on you for much of your life. Ultimately, at the end of the day, everything is an exchange rate. Your time is an exchange rate. Your energy is an exchange rate. And I hope you consider getting off zero when it comes to Bitcoin, because when it comes to currencies, you're just trying to save your purchasing power. You're just trying to save your energy. And the currency that is most worth your time is a currency that cannot be created out of thin air by another human being.